Hello and welcome to the Small Business Briefing. I'm Brian Calley, CEO of the Small Business Association of Michigan.
Hi, everyone. Good afternoon. I'm Sarah Miller, Vice President of Operations. Thanks for tuning in today. I want to welcome one of our new elite members. They are Trans World Business Advisors, owner Shati Govender. Thanks for joining. All right, so Brian, last week I was out, but I understand we talked a little bit about the Michigan Celebrates Small Business Pitch Competition here on the show, and we want to give people a little bit of a refresher about what that is and encourage them to apply.
Yeah, there's one thing I wanted to do. If you watched last week, you know that we're doing a pitch competition at our Small Business Summit in April, and there's a real prize, like a real cash prize on this, which is $10,000. And so the way that it will work is that you apply to be one of the five that give a pitch, and then the crowd that is there that day essentially makes the decision on who wins. And the part that when I was thinking about what we talked about last week, that I wasn't sure if we totally got across is people are trained to think that pitch competitions are for startup businesses. This one is not for, well, it's not limited to startup businesses. It could be any business, any small business that has got some sort of innovation or expansion that you're trying to make happen. And so I just wanted to make sure that I said real explicitly to people that this is not just a startup type of a pitch competition. It's about a new idea, and I think probably the strongest applications are going to come from existing established businesses. So the link was just dropped in the chat, and I wanted to encourage people to think about what your plans are and whether or not you want to apply to be one of the ones to give the pitch. This is one that we're really excited about it. You know, this is think about like keynote addresses and that sort of thing at the Small Business Summit. We've decided instead to have this. Yeah, we think it'll be pretty both fun and informative, but also and engaging, but also to showcase the thing that we're celebrating, which is entrepreneurship.
I know I'm really looking forward to it, so please apply. And if you have any questions, you can email info@michigancelebrates.org. All right, Brian, let's talk a little bit about Line 5, a topic we're very familiar with here on the briefing. The Army Corps of Engineers recently released a draft report about Line 5, so tell us what it said.
Yeah, this is so what they do is they take these their report and they're essentially a draft report. They put it out for public comment for 30 days. And usually what happens is that the at the end of the 30 days, they take some input. They might make a few changes, but usually the reports are pretty similar to what how the draft report reads. And so there were no surprises at all in the report that was issued for public comment last week. This, as a reminder, this is a proposal to take the pipeline that right now runs on the lake floor in the Straits of Mackinac, take it out of the water and put it into a dry tunnel about 100 feet below the lake bed. And so this is a big project and one that has come with some controversy, not necessarily about the idea of moving it from the lake bed to the tunnel, but the controversy is that it exists at all in the first place. And but the this is really one of the last major hurdles to moving from the approval process to the implementation process is for this particular permit. There's other things that have to be approved, but this is really one of the big ones that is remaining. Now, the scope of it is the part that I think make it more clear cut. The scope of the environmental impact is really on the construction. What they were looking at is on the construction of the project itself. And reading it over, essentially what it says is that there will be some short-term impacts during construction. Like literally, they'll be setting up equipment and burrowing a tunnel, and there's some impacts during that. There'll be because of where the tunnel right next or not next to, but reasonably close to the water. The tunnel itself will have an impact on the wetlands that are at the point where the tunnel is drilled in. So it had those sorts of things. Again, no surprises at all in the draft report. And so there probably will be quite a lot of feedback that comes in the next 30 days. But ultimately, it's difficult for me to imagine feedback that isn't already essentially addressed in the report. Nobody, people don't wait till this 30-day comment period to comment and to engage, file lawsuits, all the different things. So it really is a big step to get to this point where it's 30 days from the point when the Army Corps of Engineers will be at a decision point, a decision of record, where they will literally issue the permit.
So what happens after the 30-day waiting period?
So this is after the 30-day waiting period, they'll issue a permit, and there are a few other things that are required. The first is there's a permit required from the state's environmental department, the EGLE, it's called, Environment and Great Lakes. This department will decide whether or not to issue their own state-based permits. Now, they already have issued these permits in the past, and they expired, and so they have to be reissued. And so while it's not totally clear if the state will just simply reissue the permits now that the Army Corps of Engineer permit looks like it's on its way, but that decision is yet to be seen. The state would have a difficult time legally explaining why they wouldn't reissue it when they issued them before, but that is one of the steps that would be required. But there's also litigation, and there will continue to be litigation. That litigation will continue potentially for years. The question is whether or not it will literally stop the construction from happening. And one of the biggest, not one of the biggest question is whether or not the issuance of the original permit back in 1953 for this line was valid. And that essentially will be decided by the United States Supreme Court. It's difficult for me to explain how kind of earth-shattering it would be for the Supreme Court to say this permit back in 1953 was not valid because the reasoning being used would disrupt a lot of infrastructure. I mean, infrastructure everywhere across the whole country. To go back and say, well, you know, the Hoover Dam didn't follow these modern procedures, therefore it needs to be taken out. You know, like we're talking about that kind of look back, which seems wholly unrealistic, but there really are still literal legal cases, and it'll be up to the Supreme Court to decide those. So I think that the litigation itself is not necessarily legally a big threat to the project, but it is expensive and time consuming. And sometimes if if the law is not on your side, the strategy is delay, and courts and legal action is really set up for delay and slower decision making. And I think that's really the phase that it enters into. And the question is, will those court actions result in slowing or stopping of the work, or will it be able to proceed? That's an open question, one I don't know the answer to. But I think really once the permitting phase is done, if it turns out the way that I think it will, at least the way that the law says it should, then it really it's a matter of whether or not litigation, how much does litigation slow it or stop it potentially in some ways, but I think slowing rather than stopping is the most likely outcome.
And I did mention that we've talked about Line 5 quite a bit here on the show, but Brian, can you remind us what SBAM's position is on this issue and why we care? Why are we engaged?
Yeah, this is one of those issues. Obviously, people have very strong feelings about it, and we don't dodge issues that are difficult, but we do look at it from the small business perspective. And so the two things that we want to make sure is that one of our main strengths, which is the environment, is protected, and then also that energy is remains reliable and affordable. And so, in this case, you're talking about a pipeline that's right now in the lake bed, and people I think that kind of gets lost sometimes when people think, do you like or not like the pipeline? That's not really the question that's before us today. The question before the courts and before the permitting bodies is, would you rather have it as it is today on the lake floor, or would you rather have it in a tunnel, in a dry tunnel, in bedrock below the lake bed? And so that's where you kind of get clarity when you kind of realize that it's not a question of whether or not there's a pipeline there. The question is, do you want it in the water or do you want it out of the water? And that's where it becomes pretty clear to us that we do want to make sure that the so much of our lifestyle and the economy depends on how things are in the environmental health of the state, but also that energy is reliable and affordable. And the tunnel is a much better option than literally the only other alternative, which is the status quo. And so as we haven't like allowed ourselves to be pulled into an option that is not available, which is just not have it exist anymore. And so the question is, which of these two options you like? In a tunnel under the lake bed that's dry and you could walk through the tunnel and inspect it all at all times, or in the lake bed where have to rely on instrumentation and divers to check its condition. Pretty clear choice when you think of it in those terms.
All right, let's switch gears now to another topic we've covered recently, which is EVs and the autos writing off EV investment costs as their strategies shift. But Stellantis has a write-off that seems unusually large. Tell us more.
Yeah, with Stellantis, that kind of surprised, I would say, would be the right word. Investors last week when they announced a $26 billion write-off, and in terms of like what usually happens when we talked about this with Ford and General Motors before, and much smaller write-off numbers that they had. It was the idea of you make these capital investments, and those investments aren't expensed right away. They're amortized and depreciated over longer periods of time. But if you buy a piece of equipment or you make an investment in something and then it turns out you don't need it anymore, well, then you dispose of it. You're not going to amortize it as it's earning revenue in the future. You're just going to write off that expense today. And that's what Stellantis did, but at a huge number, kind of an eye-popping number. And so it was a surprise. Now, Stellantis has new leadership, and to the extent that they thought they were going to have to do future um, write-offs, I imagine the new leadership there probably wants to do this while during the honeymoon period, where nobody's blaming the new CEO for the performance of the company. You might as well take all your lumps right now. It's a different type of calculus, likely, but but still a surprising number. And a couple of things, the 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 factors that I was reading about. So high prices, the vehicles just have such a high price point that that the market didn't really develop the way that it was expected to. Range anxiety is still a real thing. And there's just, I think about I think about how many Americans, including myself sometimes, just so busy and you don't get around to filling your vehicle with gas, and you're riding it at the very end, and it's like, so you don't have a lot of time. Like, now apply that type of mindset that us busy Americans often get ourselves into to range anxiety with pure electric vehicles, and just the kind of planning ahead that you need to do in order to make sure that you're covered. So range anxiety is still, I think, is probably a bigger obstacle than what people were assuming in the beginning. And then, of course, the government pullbacks on the incentives, which was part of what took the edge off the higher prices that I mentioned in the beginning. And my guess is that a lot of larger companies are they're coming to a realization that a lot of small companies, I think, already understand is that if your business model relies on consistent long-term policies from the government, then it's pretty shaky and very, very risky. And I think that's this case. There was a whole system that was built on an assumption that there would be this kind of continuing government involvement in it. When that pulled back, I think it really did. Um, it resulted in companies really reassessing just the pure market forces and determining that they were just overextended in these areas. But still, relative to the others, the write-off that Stellantis just took, very, very, very big. And but in a sense, it makes a little more sense if you were to think about a company that's really kind of at a reset moment and they're and just wanted to get all the pain out of the way at one time. Certain logic to that.
All right, now it's time for an Election Watch 2026 segment where we talk about how much money the candidates have reported that they raised. Let's talk about the major candidates.
Yeah, I didn't look up every single candidate, but the ones that are showing up kind of leaders in the polls and the top levels in the polls are the ones that I looked up. So there's two ways that we look at these things. There's the dollars that are raised, but also how much cash is on hand, because some campaigns might raise a lot of dollars, but they burn through cash, so they're always kind of living hand to mouth. Others don't raise as much, but they also don't spend as much, and so they're kind of building up a war chest to be used later on. There's a lot of strategy on raising money and how you deploy money. So let's take a look, starting with Jocelyn Benson, which is the person who raised the most in this period. There were several that were kind of in the same neighborhood, but $995,000 Jocelyn Benson raised from the period that went from October 21st of last year through December 31st. Okay, so this is actually one of the hardest times of the year. I ran for governor once myself, and I tell you, this is the hardest time of the year to raise money, is this period. But nevertheless, 995,000. John James, from the same time period, raised 838,000. So also pretty solid numbers for that about 10-week time period, 9 or 10 week time period. The next was Duggan. So Mike Duggan, former mayor of Detroit, at 643,000. And then also Mike Cox raised 525,000. And Mike Cox has put a lot of money in personally, and so his even though his purely raised dollars outside of what he's put in doesn't compare to the other front runners, but still the amount of cash on hand is quite a lot. Actually, Mike Cox has $3.5 million in cash on hand. Let's see here. So no, I'm sorry. He has $4.1 million cash on hand. He put 3.5 million in himself. Okay, so 4.1 million. That means that he has the most money banked. So he's not one of the front runners in the polling, but has the most money on hand. Benson has the second most money on hand, which is 3.5 million. Duggan has 2.6 million, and John James 2.5 million. So a couple other notes. So Duggan has really grown in the polls, and it's because he's already spending. So he's out there getting his name ID built up. So he's spending, but also raising decent money too. And so, with him, he really can't wait to start. He's already started, and then with John James, 2.5 million on hand, which is at the lower end of these candidates that we've talked about. But he reminded in his announcement of the numbers, reminded folks that there is a separate political action committee with several million more dollars in it that will also aggressively support his candidacy. So you do kind of get a picture of the way that some of these candidates have started to really build up their war chests, what their strategies are in spending, which ones can afford to wait a little longer, which ones are deploying now. But this is where it really starts to get serious. Now, the other X factor in here, that a person who is not a candidate when during this time period, but has since announced, Perry Johnson, business person from Southeast Michigan. He has, with his announcement, said that he will, in 60 days, spend $9 million. That is a lot of money to spend in 60 days. And you can already see the evidence of that happening. The money being deployed. And so that's kind of an X factor that's hanging out there that is very, very new and too early to assess the effectiveness of the dollars and the message and so forth. But dollars at a scale that actually is, well, two times bigger than what the other candidates have been able to raise so far in the race, or the one with the most money banked. So they give you an idea of scale. It's a lot, can't be ignored, but still too early to determine how effective it'll be.
Speaking of Perry Johnson, we are committed to giving you all an opportunity to meet with him, just like we have with the other gubernatorial candidates. And I expect we'll be rolling out registration for an event on March 9th in Southeast Michigan very shortly. So stay tuned for that. All right, Brian, it is time for Data Monday.
All right, we're going to do a Data Monday, even though, this time of month, we don't have the big, the big items like a jobs report or the inflation numbers are just not out yet. But some other interesting things that I just had kind of set aside to share with you. The first is a Gallup poll. I love Gallup polls because they do go far and wide. And this is not about business owners, of course, but it's what the general public expects. And so that's, if there's a theme through this, it's kind of how individuals are responding to today's economic times. But the expectation here, you'll see that half, or a lot more than half, actually expect the stock market to go up or stay the same. Economic growth, you see the same thing, that there'll be positive economic growth or neutral. Over here on this right-hand side is where you have the those that expect it to go down a little or go down a lot. Interest rates. So people actually expect interest rates, that's the side over here, to go down more in the future. And they're right. I believe that interest rates will go down more in the future. Unemployment. So actually, this is one that was kind of interesting, where you see, a 50-50 split in terms of those that expect that unemployment will go up, and then those that think it'll stay the same or go down. And then on inflation, people expect either a lot or a little inflation, and so that it feeds into somewhat, at least, into consumer sentiment. And that's what we have next, which is the University of Michigan's Consumer Sentiment Index. And you'll see, where those, or I'm sorry, these are inflation expectations, not consumer sentiment. We'll get to sentiment in just a minute. But again, consumers' expectations of inflation, and that at an area that starting to more closely resemble historical expectations, but still a bit elevated. Consumer sentiment is looked at in a few different ways, and so in this case, you'll see that consumer sentiment is actually and expectations are starting to rise a little bit, but historically still very low. You'll see in the pandemic, which is that red shaded area, that all of these indexes fell, and they have kind of generally trended worse over time. And so we do see a little bit of an uptick at the moment, which is notable, but still historically quite low. Job openings, you'll see that the job openings number, actually, let me go to the next slide, which I think is a clearer picture of that top one that we were just looking at. that's actually starting to fall to a level that was the pre-pandemic level. So there were lots of job openings before the after the pandemic with all that stimulus. There were tons of opening. People couldn't find enough people, and those things are changing now. It's more kind of normal-ish. But if you look at this graph, you'll see that I don't know what is normal. It was much lower in the past in terms of openings. It just feels low today, I think, because it was so high just a little while ago. But historically speaking, I think you could still say that we're, on the high end of normal in terms of openings. And the quits rate, this is one I think is kind of telling in how consumers are feeling or how individuals, workers are feeling. The quits rate, the percentage of people that quit their jobs, it was higher right after the pandemic, after all that stimulus, and people had lots of opportunities. They're chasing different things. It's definitely settled back down into kind of a normal looking range. As the economy gets worse, fewer people quit their jobs. It's just it's one of those indicators that you look at, and as this has come down, it's because generally it's strong correlation with economic sentiments. Initial jobless claims, these can be, and then ongoing claims, you'll see that both of those are up a little bit. And so it's again, another just these subtle little kind of subtle nudges that are showing that things economically are just a little um, shakier than before. So there, out of all of those items, I would say that just generally everything looks a little kind of on edge, and people are feeling kind of on edge. The sentiment and the numbers really do they match up well, and it's not a bottom is falling out type of a picture, but it's not one that inspires for like aggressively moving forward in the future. And it is interesting that that sentiment and the oftentimes individual and worker sentiment does not match up with economic data, and at the moment it actually seems pretty close.
All right, well, thanks for your insights, Brian, and thanks everyone for tuning in today. Have a wonderful week. We will be back here next Monday at 3 o'clock.
Thanks everybody, see you next time.